How many of you are seriously looking for give me more money? Give me more money for managing your business, funding your business better. All right, I think almost all of us. Every industrialist needs more and more money for either strengthening their current business or expanding into the new horizons. We have got a specialist in this session who has been into hem of affairs for the last many years, and this person is traveling worldwide, making a difference in organizations' life, helping many organizations generate great funds, and he himself is a wonderful investor. He personally owns a portfolio of 27 SME investments. My goodness. He is always on the look for more and more investments. He is a founder of MSMEx, which is India's leading MSME advisor. And he has got a SBI registered company, Growbiz SME Opportunity Fund. You'll be surprised to know that he has started his career with the Nuclear Power Corporation, moved to Larsen & Toubro, Kellogg Brown and Roots. Can I have his picture, please? Rishabh? I'm talking to you about Mr. Amit Kumar. Music, please. Let's welcome Amit. Mr. Amit, please come. To give him a company, we have got Mr. Deepanshu Goel, who is the Managing Director and Chairman of Creative Graphic Solutions India Limited. Can I have Mr. Deepanshu over here? Deepanshu, please come. He is a first generation entrepreneur whose leadership has propelled creative graphics from its modest beginnings to a premier pre-prestige shop in India. Fantastic. Welcome, Deepanshu. Please take your seat. Yeah. Let's begin the proceeding now.
Hi everyone, am I audible? Hello everyone, am I audible?
Audible.
So everyone here is saying that my specs are same as the in picture as per our Flexo Summit logo. So is a small company allowed to think big? Can a small company scale to a new height? Hi, I'm Deepanshu Goel, Managing Director of a company called Creative Graphic Solutions India Limited. So I started a journey in early 2000s, where I started from scratch, literally scratched 35,000 rupees in my pocket, and started this Flexo plate business from Noida. And it was a journey of over a period of 20 years, where we had a small incremental growth over every year. We started from one factory, now we have 9 factories. But there has been always a kind of a challenge for a small company. There are ups and downs. There are issues of raising funds. How do we scale? What is the guidance? What is the mentorship? There has been always been a challenge. I think 90% of the companies in printing, packaging are small companies. There have been issues like this. But there had been always an aspiration of creative graphics to grow big, grow beyond. But how do we go beyond? How do we grow beyond? Was the question. How do we raise funds? Do we raise equity or do we raise debt? What should be the right way of going ahead? That was the kind of questions which I was trying to solve. Then I joined a program called MSMEx cohort. It was a kind of a small educational plan which talks about companies like us who want to grow big but not able to find the ways. It teaches about numbers, it teaches about the business, it teaches how an outsider looks a company onto. So I met Mr. Amit Kumar. He was heading MSMEx. He guided all of us, and we got finally listed on 9th of April 2024. So it was a dream come true because a small company, I never ever dreamed of going public. I never thought that it would be a reality. But it has, after listing, it is not only about money. It has changed the perspective. It has changed total perspective of doing business. It has changed how numbers are important, how ROI is important. So the changing way of business, the compliance part, and so many other are the extra benefits of going public. I would introduce Mr. Amit Kumar, who has guided us, mentored us, and also a big investor in our company, to take you through all that kind of journey, so anybody who has some kind of aspiration would be benefited. Welcome, Mr.
Thank you, Deepanshu ji. Am I audible on the back side? Energy बहुत low लग रही है. Am I audible on the back side? Okay, so I will take around 25 to 30 minutes, and I will give one guarantee that my session will not be boring at all. How does it sound? Exciting? I'll be moving across the stage so that I can utilize the full space which I've been given. Okay, so skipping the introduction part, directly moving on to the important agenda, which is funding. The funding, there are many ways to raise fund, but this is also one of the possibilities of raising fund, which is called listing on capital market. Now, these are some of my portfolio companies, not all, because the list is large, some of my portfolio companies which are already listed. And can you identify creative graphics here? Yes, so you can see Deepanshu ji already. So the listing ceremony was last year in April, and I will share some of the growth parameters which the company has already achieved. But before that, let me share a classic example of how a SME grows. So a typical SME will grow 10% year on year, 15% year on year, 20% year on year. Now my question is that when the GDP is growing 7%, the industry itself is growing more than 10%, what's so big deal? We are just going with the flow. Just going with the flow. Do we have the courage to grow faster than this? Yes, we have. Do we have aspiration to grow faster? Yes, we have. But do we know how to grow faster? Possibly not. And there are constraints which are stopping us. What are those constraints? Look at these numbers. Assume that a company is doing 100 crore turnover. Average profitability of an industry is say 7, 8%, 9%. Let us take 8 crore is the profit after tax for this company. The average growth, which I said is 15%, the company will grow. Maybe it will take 5 years to almost reach to a turnover of double. Why? Because what is required to grow the company is capital. Now 8 crore will not lead to 8 crore cash. 8 crore will lead hardly 5 crore cash, because 35 to 40% cash is stuck in various things. Multiple things, and you all know, so I will not repeat, will not get into finance. But yes, whatever is the profit after tax, that is not cash. Even if we take debt, and we don't want to take debt beyond limits because we don't want to present collateral. And without collateral, the debt is only available based on the strength of the balance sheet. And that leaves us only a limited debt opportunity, and that is where even if we are a very good working capital managed company, how much? 45 days? 50 days? I have seen the companies where the working capital cycles are in the range of 60 days, 90 days, 120 days. But I am not taking those high working capital cycles. I am just taking a good company with an average working capital cycle of say 45 days. Then at least 8 times you have to rotate the money. And for that, how much you need? You need at least that much capital. So with that, whatever cash you have and whatever extra debt you can get comfortably, you are only growing that much. You feed that into the next year and then you get 15% growth, average. You feed that to next year and then you get 15% growth next year, average. You want to grow more, but you don't have capital. And that is where we call it a bootstrap company. In some cases, I call it not bootstrap, it is bootstrapped company. So how to break this trap? Let us see a possibility of a boosted growth company. Assume that this company understands the power of capital and going and breaking all the myths and offering some of the equity to shareholders and raising money from them, and assume that this company is raising, say, on an average of 30 crore rupees. With that kind of balance sheet, yes, that is doable. With that, I don't need debt now, but the cash which I earned in that year is mine. I feed that. What do? I am able to boost more working capital. I am able to invest in capex, and that is where I am able to take a larger plunge. And you see the result? In the 5 years, the company can grow 5 times, provided there is a space in market. So this is not true for an industry where there is no space in the market. But if the space is there, and I always say it this way, when I as investor look into some business, I only see 3 things: the market, the business model, and the management or the promoter. It is like you want to see how fast a car can go, you will need a fantastic road, a fantastic car, and a fantastic driver. So the road for me is market size. The car for me is business or business model, and the driver for me is the management, the promoter of the company. And if all 3 are fantastic, who can stop the growth in my investment? No one. Unless we do some screw up there. So considering this is the normal scenario of a bootstrap or a boosted growth company, this sounds illogical at times or sounds irrational at times. Now if I give you example, 2023 when we met, and 2026 where we are, it just half year result was declared. You know, whatever was the yearly achievement of Deepanshu ji in 2023, that is happening in 1 quarter of 2026. 4 times growth in 3 years. So who says that 5 times growth in 5 years is impossible or difficult? No, it is not. And because I am invested with the company and I keep tracking the growth, and based on my experience, by the time he completes 5 years, maybe I will get a 10x growth in the business, and 10x growth in my investment, 10x growth in his business, 10x growth with everyone associated with the company in 5 years. So when we are seeing an example of 10x growth in front of us, whatever is on the slide is just an average. And some of you can do better. Now, what this brings in? A 500 crore turnover company with a close to 50 crore profit. You know, the valuation could be 1,000 crore, 1,500 crore. But if you go with the traditional method, and if you try to build the wealth through that, that profit is my wealth. How much wealth you can build? You add up all the profits of next 5 years. 50 crore, 60 crore, 70 crore, less than 100 crore. What is the value of that unlisted company? Book value, less than 100 crore. And here, the possibility is 1,000 crore plus valuation. That is called unlocking the magic and we will study that more in coming slides. Moving on to next. In our India, we have two types of stock exchanges, BSE and NSE. So BSE came up with BSE SME and NSE came up with NSE Emerge. This happened in 2012. Now, Sunday homework to all of you, if you go to YouTube and type NSE documentary, not today, but some other day, you will see a fantastic documentary which talks about how the National Stock Exchange actually was formed, and by the prestigious institutions. People from IITs, IIMs, they came together, and one of those gentlemen is heading the NSE today, Mr. Ashish Chauhan. So it happened decades back. So that was the foundation of Indian capital markets, and to all of you, if I want to give you some goosebumps, 6,000 total listed companies we have in India, maximum in the world. I am not saying one of the highest, maximum in the world. Now just imagine 6,000 listed companies are doing trading on a daily basis. The kind of IT infra you need should be world class, and we have that world class IT infra. The settlements are happening super fast. You trade it today, by evening you get money in the bank, or next day you get money in the banks. That is the infra of financial ecosystem we have in India. But yes, we are not appreciating all because we are not looking into it. And let me show you few more facts. Both these stock exchanges, till today, they are hosting 1,370 plus SMEs already. Creative Graphics is one of them. Now this number is not that large because we have total 3 lakh SMEs in India. And with respect to that, this is 0.4% only, which is fraction. Why this cannot be 1%, 2%? Yes, this can be. So coming years, we will see that India will have maybe 5,000-6,000 only SMEs listed, and we will compete with the main board soon. So these 1,372 companies they have collectively raised, cumulatively as on date, 33,000 crore rupees. Again, this number looks pretty large here. With respect to main board, this may be fundraise of only one company. Collectively, this has created a valuation of 4.5 lakh crore. And 1/3 of these companies are already migrated to the main board. Now, this is a fantastic gateway. A lot of people think that once I get listed on SME, I will remain on SME forever. No, in 3 biological years, once you complete that, there are few other requirements. You complete that, and you can be migrated to the main board. Giving you some confidence. Today, Creative Graphics has already completed all the requirements to get migrated on the main board. Only 1.5 years hua hai, another 1.5 years to be also passed on, and then they will be migrated to the main board. So the other conditions are less stringent, but the biological 3 years are more important. Few years back, this was 2 years only. Now the regulator has increased it because they want more and more sanity in the ecosystem, which is fair, good. Now some other facts. Year 2023, calendar year, January to December, 175 SMEs got listed, raising 4,600 crore. Average is around 26 crore per SME IPO. Year 2024, last year, 246 companies got listed, raising 9,500 crore. Average is 36-37 crore per IPO. And that was the year India broke another record in capital markets. India became the country for listing maximum number of companies across the globe in the entire history of capital market. 330 companies, SME plus main board put together. That is the power of primary market. India broke that record. I don't think any other country can break it other than India. This year, sitting today, we have 1 more month to go. 228 SMEs are already listed, raising 10,500 crore. The bar is raised. 45 plus crore is the average IPO size. That means average valuation of an SME is 200 crore. Because generally you have to dilute 26-27% to become a listed company. So overall 200 crore is the average SME IPO overall valuation size. These are the facts. Now, moving forward, if I want to now give you some gist of basics of valuation, we need to take a step back and understand the value first. And that value you can understand easily with some correlation of products. So value in anything is derived by two things. One is the endorsement, and the second is the platform. The endorsement means who is backing it, who is endorsing, who is certifying it. It may not be Amir Khan only, it can be an ISI, or it can be a accreditation, it can be a certification from a third party, it can be a customer testimony, or it can be anything else which can endorse the product. The second is the platform at which it is available. Now this is not digestible easily. Platform se kya farak padta hai? No, it matters. So if I tell you that NSE is coming up with their own IPO and NSE's unlisted shares are being traded or available, and you can go and buy NSE shares on IndiaMart. IndiaMart is a fantastic platform. We all are listed on it already. Go and buy NSE shares on IndiaMart. Okay, you don't want to trust an Indian platform. Okay, NSE shares are available on Amazon. Will you buy? No. Platform matters. But if I say, okay, NSE shares are available with HDFC Securities, this makes sense. So platform makes sense. Platform makes sense. The thing is that the product should be sold or should be available on relevant platform. Otherwise, this has no meaning, and it should be endorsed by relevant people. So here what happens, when you go for listing, the endorsement is coming through lawyers, merchant bankers, investors, regulators, and various other agencies who are shaping the company, and then only it is available to on National Stock Exchange and Bombay Stock Exchange, and these are relevant platforms, and that is creating the value in your company. Let's understand this more from an example. What is this? A stone with some physical characteristics, hardest with a crystalline structure. Now this stone can be shaped very well and can be converted into something beautiful for which you are ready to pay. How much? Maybe 100 rupees stone will be available for 1,000 rupees. But if I say, okay, Kumar and Kumar, my company is selling that stone, I am not known for it, not a relevant platform. And that's why you will not pay 1,00,000 rupee for it. But the moment it is available on a relevant platform, you will pay for it. So what is going to happen here? Your company today in an unlisted format as a business is like that stone. It has all the intrinsic characteristics. Every physical characteristic is there, but value is not visible. So someone need to shape it, polish it, and bring it on the relevant platform. Then only the value is opened up. So without that, possibly it's just a book value company or the sum accumulation of the assets what you have. Can you command a valuation? No. For that you will have to go through an Agni Pariksha or a process which is drafted by the regulators. You will have to go through that, and then only you get the value. And this value again can be linked or understood two ways. The first is customer value. The more we deliver a customer value to the customer, the higher pricing power we have, and that's where higher profit we can make. And this profit is lying in the bank. At the end of the year, this is transferred to balance sheet in terms of reserves and surplus, and some of this money can be used as assets to buy or build the assets. Overall, the customer value today, cumulatively, whatever we have created, is only in 3 buckets. And if you want to cross-check how much customer value you have delivered and generated till date, just go and check your book value. Now, book value has 2 components. Your equity, which you invested in the company, and the cumulatively the customer value which you have earned. And these 2 things is book value, simple. But this is the only intrinsic value in your company. Like Raja. Raja Babu, SME entrepreneur, a typical SME entrepreneur, is doing the same thing. Year one, he started the business, fantastic growth, 10 crore overall turnover. And he got a 1 crore profit after tax, very excited, running here and there, going and talking to all his colleagues and peers and other people. And then he shared, this is what I have done. People said, oh, man, what is that you're doing? This is not a great thing. You should not show the entire profit. What will you do with that? You'll pay a lot of taxes. I said, so what should I do? Oh, don't worry, we will tell you the techniques. Everyone told him the technique, and then he said, okay, I will not show 10% profit, I will only show 5% profit, and this is how he started creating his books. But then, later on, he understood something called enterprise value. Now, the wealth is not only in the bottom line. When you earn the revenue, you purchase the raw material, you build a supply chain, you develop the team, you develop the products, you develop processes and systems, you develop training modules, you create multiple things there. Everything is a value in the company, but you will not get that. Why? Because you are ignoring the enterprise value, you are only focusing on the bottom line, which is your only true wealth. But actually Raja understood that. But this enterprise value, you cannot easily identify in any financial reports, because financial reports are traditionally designed for MC, ROC purpose, that's it, or possibly for income tax purpose. They don't care for your enterprise value. For that, you need to do something else, what Raja did. He decided to go for listing in year 6, and he said, okay, let me go for listing. Possibly he got, say, around 40 CR as a valuation, 10 crore as a fundraise. He invested that, started growing faster, and then he created a valuation of 500 crore. Now, even if Raja is only holding 75% of his company, he is still sitting on a wealth of more than 350 crore. More than 350 crore, which with the traditional method he will not be able to create. Again, same 30, 40, 50 crore max. And for that also, if he wants to withdraw that, thoda sa aage se, thoda sa piche se, he'll have to use all the techniques. Because without that, he will not be able to withdraw this wealth. In this case, if he's withdrawing this wealth, only long-term capital gain tax of 12.5% plus, 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 plus. That's it. Only 14% tax you pay, and rest is yours. Tax paid money in the bank. This is how you unlock the wealth and you create that magic. Now, I'm not telling anything story. All of you are connected, you have chat GPTs, you have phones, just go and cross-check. Check the ratio of the market cap and the book value of the company. The top companies in the index, and this is all SME, 60 times, 40 times, 30 times, this is not a percentage, this is times. And then again, even the average companies are enjoying 4, 5, 6x of their book value. Otherwise, you are just a book value company. Now, for this, you need a better mindset. Because if your mindset is still that running business, focusing on bottom line, sorry. But if you think like an entrepreneur, and if you focus on enterprise value, you own the entire business, not only the bottom line. Own the entire business and learn enterprise value. You need to learn it because you have never mastered it. In business, you are PhD. 3-year graduation, 2-year masters, and few more years, PhD. You are already PhD in business. But enterprise value, you are not even kindergarten. Because you have never tried to learn it. So you need to spend time and learn it. Whatever you call it, it's all wealth. It is yours, which is hidden. Now, a lot of people think, पैसा दे दो बाकी सब मैं कर लूँगा ये तो ज्ञान है. No, it is not true. The fact says that all these 1300 plus listed SMEs, 1/3 of these wasted investors' money. Totally wasted. Only 2/3 did something better. But the top 10% are creating the magic. 10x, 20x growth in valuation and in top line and bottom line. And that requires something different. That requires a preparation. You need to prepare to perform. You cannot just go wake up and say, okay, let me go for listing. You need a year to prepare yourself. And what is this preparation? This is related to your entity structuring. This is related to your financial structuring. This is related to your business structuring and governance structuring. Because you are going to take the money from public, you will be under the scanner of a regulator, so you need to do something different, and that is what is preparation. So that preparation will help you, and we have done that already. And it took 1 year to do those preparations before we even went to the capital market. So this is required. Now, to sum up everything, you need to have a fantastic motive. A lot of people say, Amit, few hundred crore ka property hai, this, that, everything. Why should I take this panga? Why should I go for it? I'm scared of it. I'm not excited enough. Okay, let me share some of the whys with you. Why people go for it? The first why is, I want personal wealth. It's not enough for me. I'm not here for this 30, 40, 50 crore. I'm possibly looking for 1,000 crore wealth. Okay? Very good reason to go for IPO. Second, you say, it's not only for me, I need to take care of my 3, 4 generations. So you need to create a generational wealth. That's also fantastic reason. But what next? Then you take a pledge and you say, I have made wealth, my generation has made wealth, now I need to create millionaires in my team by offering them stock options, by giving them good salaries, incentives. That is also a fantastic objective. And then you start building people around you, you start donating in your society, you start giving back to the society, and then you are owning that social responsibility. But that will not strike you if you are still here. It's like Maslow's pyramid. नीचे से पेट भरना शुरू होगा तब जाके वो आएगा. So you need to create that kind of throw. Then only you do this. And at last, if you are able to do everything, then one day you create a legacy. And a lot of people are looking for that as well. And that's also a fantastic objective, that you want to create a legacy, because you all are entrepreneurs and you are the chosen ones. God has chosen you. God has empowered you with some extraordinary capabilities to convert an idea into wealth. Don't create it for yourself only.
Wow.
Create it for everyone around you. Leave that wealth for a legacy. Then only you will be remembered forever. Thank you.
Wow, what a session. Wonderful. Great. We are all charged and looking forward to become as big as possible, because it's limitless. Possibilities are limitless. Possibilities to create profit is limitless. Thank you very much, Amit, for making this session such an engaging session, such a powerful session, and I'm sure everybody present over here is looking forward to meet you, interact with you, and ask you how can you help them generate more
Sure,
funds.
I'm available here.
Wonderful. Thank you so much. Perhaps some of them know you, but some of them would like to have your number also.
Sure.
So can you tell your number?
9819
Please write down. 98
19
19
560
560
100.
100. Everybody got it?
9819 560 100.
Thank you so much. Now, to honor our speaker, may I request Mr. Anil Arora to come and
Meantime,
present a
I request
memento.
Deepanshu ji. Deepanshu ji, whatever I have told, you are the evidence.
This has been a fantastic journey post-listing. As I said earlier, this changes the whole perspective. It changes the whole idea of doing business. It creates wealth. It creates definitely, you are able to empower your people. You are able to empower the generation which are coming. And I hope and I suppose that for a smaller company like us, who never could even dream of all these kind of possibilities, with the help of NSEs, BSE and the Government of India, we can also exploit these opportunities. So all of you can meet and also explore. Thank you.
Excellent.